Hey everyone, welcome back to another episode of the Short and Long of It with Scotty. This is our fourth weekend update. It's March 2nd, 2025. Can't believe it's March already. Today we're briefly going to go over the SPY and the overall market outlook, as well as check in with all of our positions that we have running. We had an Nvda cash secure put expiring this past Friday on 28 February. We're going to check in on our Google position that doesn't expire until March 14th. We're going to look at any other new positions that I may have entered in this past week given the market volatility. If you recall from my last week's episode, I had my eye on AMD. There were some key levels for the SPY that I pointed out in last week's episode at the 585 level. That level actually got hit and held up the market. I was looking to take advantage of market fear and possibly enter in a position on the SPY when it hit those areas. My overall outlook on the market kind of neutral, and SPY is really kind of selling off for 2 weeks. Nvda put out some great earnings on the 26th that I thought maybe it might hold up the market. And then we have some PCE data that came out on Friday, the 28th as well, that showed that maybe some inflation is starting to cool a little bit, but we'll have to wait for another CPI print to come out for the month of February to really show some cooling in inflation. So with that, we'll step into the SPY chart and then go from there. So looking at the SPY chart here, this is their daily chart. As everyone knows, if you've been paying attention to the market at all, you know it's been selling off for about a week and a half. So on Friday, you got a nice push back into the 594 area after it bouncing off this 585 area. You match it up with the RSI, the RSI actually dipped down to 33, which is about the lowest it's been in about 6 months. SPY was definitely oversold. Not saying that it can't go lower, but the 585 area was definitely an area I was looking at for maybe to hold up the market, and actually did. Couple that with the PCE data that came out showing a cooling there, which is what the Fed's looking for and kind of impacts interest rate cuts down the road. When this 585 area was hit, especially on this red candle on Thursday, I was looking to sell a cash secure put on SPY at 570. I was able to execute that trade, and we're just going to let that ride. It's about even right now. I'll go over here to the trade tab to kind of show you what I was looking at. So I entered in this trade, expires 28 March 2025. At the time, it was about 29 days, which is about in that happy zone. 28 to 35 days of expiration is usually the contract length that I'll pick for cash secure puts. So as you can see here, 570, I have this contract open. It's worth $422 right now. I was able to sell it for that price at $422. So this is what I've referred to in the past, that it'll show a negative number if the contract is worth more than what you sold it for originally. You're not losing money here. You receive that premium up front. So this open will fluctuate depending on where that you entered in the contract. There's a lot of extenuating factors when it comes to what the contract is worth. But regardless, the point I'm trying to make here is you're going to keep that 422. It doesn't matter if it goes to 5 or 6 or 7, right? You're not negative there. You're not down any money. It's just what the contract is worth at that current time versus what you sold it for. And the further out of the money that this contract goes, the less it'll be worth. So it's sitting at that 0.21 delta, which is the delta, that area I try to pick cash secure puts on unless I'm feeling really confident about a certain level, right? So like Nvda, our week 1 weekend recap, I was talking about that 115 area multiple times and why I thought that was a good area of support for Nvda. So that 0.20 delta does come into play unless I have a lot more confidence on a certain level, and then maybe I'll go further in the money or further out of the money on a contract. Speaking of Nvda, we'll jump to their charts and kind of see where they're at, and then talk about how I rolled my cash secure put that expired on 28 February. Alright, so looking at Nvidia's chart here, eerily similar to the SPY, right? And definitely a wild ride for our Nvidia cash secure put. I had entered in the 115 cash secure put back in January on the 29th and had let that ride. And Nvidia, touched all the way up here to 143, and then all the way one day before expiration was only a couple dollars out of the money. I was looking to roll it around that time. When you're rolling it, you want to roll that contract for profit. So what you're doing is buying the contract back for a lower price than what you sold it for, and then you're selling another contract another 28 to 35 days in expiration for a profit. So if you guys recall, when I sold this initial cash secure put at 115, I received 440, and then they decayed all the way to $10 actually on this Friday. So I rolled it around noon on Friday, and it was only worth $11 at the time. So I bought that contract back, and then I rolled it to April 4th, 2025, which is, another 32 days out or so, and received a profit. So we can go and look at the trade tab and check that out. So right here on April 4th, 2025, you can see my cash secure put position here. It's a very large bid ask right now just because it's over the weekend and the market kind of reacted after hours. Nvidia is sitting around the 125 area. So that delta is 0.29. Like I said, I feel confident about a certain level too. I'll sell a cash secure put at that level, and I saw it at the 115, so slightly higher in delta, but still a really great premium. I received $499 for selling that contract at 115, and that was less the $11. So technically it was $510 when I sold it for, but less than $11 to buy the contract back. So I received $499, so which is really nice price. It expires in 33 days. So $500 a month selling Nvidia puts, it's a pretty nice return, right? And that's just even before you run the rest of the wheel strategy. If you're confused about cash secure puts and the wheel strategy, I have a video that I put out breaking down the wheel strategy, so you can check that out. But regardless, I'm gonna let this thing ride. I'm very happy with premium that I received here at $499, and the option price. It went exactly to plan, and we just didn't get a sign, right? And just rolled it to the next month out. Now we're gonna check in on our Google position. So we had sold this cash secure put. We're looking at this 175 area, and it's really kind of sold off. And if you check this RSI out, it's considered oversold. I really like Google's financials that they put out. I like their fundamentals, so I have no problem with this being at 172. It's in the money. I haven't been assigned this contract yet because the contract doesn't expire until 14 March. So I've alluded to this in the past. This thing can be in the money, 6, 7, 8, 9, 10 times. But if it's not in the money at contract expiration, you most likely will not be assigned. So right now it's sitting at 172, and we're totally fine. It's got sold off for the rest of the market. I would not be surprised if it just goes back above this 177 area to this 180 area. I might not get a sign, but if I do, amazing. I want to own it. Google. I have no problem with owning Google shares, and that's the end goal there. So I can start selling cover calls on that position. It's just another good example of showing like, hey, it's in the money right now, but I haven't been assigned it because we're so far out from contract expiration. Jump into AMD. Mentioned them at the top. Last week I was talking about AMD and how their earnings report came out. Now I really like their earnings. It seems like they're really turning it around. I think at the time, they were sitting around this 112, 110 area. Now they're sitting around the 100 mark, right? 99.86. After hours, they're at 117. They're at that oversold factor. Like I said, just because it's oversold doesn't mean it can't go any lower, but my thesis and their financials and their fundamentals, I think they're at a good juncture to buy at 100. I ended up buying 100 shares of AMD on this candle right here when it pulled back into the 101, 100 area, which is a key level that I marked on our charts last week. So I'm carrying 100 shares. I'll look to sell cover calls once it gets above this 20-day moving average, so basically midway point of the Bollinger Bands here, and then look for this strike price around 120. We're holding these for the long term, so I'm going to be patient, wait for AMD to retrace back up into this mid area and then start selling cover calls. So looking at the market outlook this week, we're pretty light on the news side. So we have jobless claims that come out on Thursday, and then we have non-farm payrolls coming out on Fridays. So the market might just rebound on Monday through Wednesday, and then based off the information that comes out Thursday and Friday, it could pull right back to where it is now. So it's kind of a wait and see approach here. If you didn't catch my Nvidia short that I put out yesterday, take a look at it. I go over Nvidia's annual earnings that they put out for 2024. It's really good news for the company, and definitely gives me even more confidence to sell these cash secure puts at the 115 area. And then in my other account, my long-term investing account, I'm definitely doubling down on my shares Monday, Tuesday, Wednesday. So I'm pretty excited about Nvidia right now. I also put out another short about Tesla and where it's kind of going, in my opinion. In regards to outlook, we already know it has plenty of headwinds with Elon just talking in general, right? And then they have their own fundamentals with their company that investors are kind of getting tired of the promises of autonomous driving and the robo-taxi and stuff like that. People are kind of getting impatient, so they've been selling off on Tesla for a multitude of reasons, those being the main ones. So check those out if y'all have time. As always, feel free to leave a comment on this video if you need me to go further into depth, anything I may have covered, or if you want me to check out any other stocks that you may be interested in. I highly suggest checking out my wheel strategy and my leaf strategy videos that I put out. I go pretty in depth on how to execute those strategies and how I use those to really capitalize on moments in the market. When the market's really selling off, this is a perfect time to do your due diligence on companies, dive into their financials, dive into their fundamentals, dive into their technicals, and really start loading up. For whatever reason, people are scared to get into the markets when the markets are selling off. They rather buy the top or try to avoid buying the top, and it becomes like a analysis paralysis type of situation. The biggest thing is to get into the market. You can't time the market, but you can have time in the market. And I think utilizing these red weeks to double down on stocks that you really want to own, that have really good fundamentals and really good technicals, is very important to capitalize the upside for these stocks. So with that, be safe in the markets, and y'all take care.